Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. As is usual at this time of year, I stop looking at my daily and weekly charts and instead concentrate on the longer term view using my monthly, even yearly charts. If you'd like to discuss any of these, I'd only be too happy to hear from you. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, let me now introduce today's longer term chart.
Today I'll be looking longer term at Paris Rapeseed. Last year I said, and I quote, "Before I go any further, I should like to point out the elephant in the room. 2020 was a rare annual key reversal up. Although I've pointed out patterns on how the market advanced higher, it is to me without doubt this singular event that has been the cause and origin of the big technical moves up we've seen up until 2022. And that's the end of the quote. Now, I carried on a little later last year, and I quote, and it is a long quote I'm afraid, but valid. So I quote, "This also led me to ponder on the pattern the market left behind with all these hesitations, and that was quite a sharp, narrow head and shoulders top between September 21 to February 2023, with a downward pointing neckline. That's currently at 390 3/4. The break below in February 2023 thus gave us a primary target X in the 393 zone, with a secondary much harder to reach target X1 down in the 246 zone. To be honest, saying target X1, the secondary target, is a harder to reach is a heavy understatement, as this would see prices down to levels not seen since 2006. However, the primary target X at 393 was achieved in May 2023, and prices have started to form a new pattern from then onwards. Now, initially I was unsure what this might be, siding towards it being a possible 2023 to 2024 double bottom, with base support of sorts being influenced by the 50% absolute Fibonacci line of 445. However, I also noted a pair of major uptrends nearby at the time. The big 2005 to date uptrend, which is currently at 393 1/4, and I've highlighted this year in dark blue, and that's me speaking just now, and I carried on with the quote, and the 2014 to date uptrend, that's currently at 373 1/2, as well as all the congestion seen between 2015 to 2021 between 340 to 400. And that's the end of the quote. Sorry it's a long one, but it's valid. All the points I raised last year are still valid as we start 2026, and I think I could not actually have put it any better this year. Now, start of 2024, I thought a simpler pattern had started to emerge also of an ascending wedge pattern, which could be finessed into a bull channel, which is what happened actually. However, this pattern did not last into 2025, as the downtrend pressure from the 3-year moving average, downward pressure from the 3-year moving average, which is currently at 469 1/2, and to a lesser degree the gold 5-year moving average, which is currently at 532, pushed prices lower. Now, since mid-2024, the market has found some fresh support in an old workhorse, and that's the 50% absolute Fibonacci line at 445 1/2. And a 50% Fibonacci line has been tested in December last year, now in January this year, and it seems for now to be holding. There's also another set of factors to consider on the downside, something I've highlighted this year. The first is a 2020 to date uptrend, highlighted in bright red, currently at 428. This is also a 2-pointer uptrend, only a 2-pointer, but it came close to being a 3-pointer in February 2024, though obviously didn't. This ties in with the larger pattern, which is the bright green early 2020 to mid 2023 bullish shift pitchfork. The lower time for this should be at the same level as the bright red uptrend, but for some reason, probably construction error on my part, it's a little higher today, which is currently at 430 1/4. All these factors together has made me think for the first time that we do not have a straightforward head and shoulders top, but possibly a head and shoulders continuation pattern of some form. It all comes down to what the market will do this year in 2026. Well, I hope it is. Maybe even longer than that. Will it stay above the bright green, bright red, dark blue support lines, as well as the 50% absolute Fibonacci line and the 2014 to date uptrend? Or will it start building a more bullish orientated view, even if it tests these on the downside? And for this, I'd look to see if price can stabilize over the mauve 3-year moving average and maybe start looking once again at the slowly rising gold 5-year moving average overhead. This is the first time I'm thinking that reaching the primary target, and only the primary target of the Head and Shoulders top pattern, and not going for target X1 below, the secondary target, may have been enough.
Thank you for watching and listening. This annual broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.